We'll be diving into an essential aspect of business, preparing financial statements. Understanding financial statements is crucial for assessing a company's health, guiding strategic decisions, and communicating with stakeholders. Let's walk through the steps involved in creating these vital documents. First, we begin with the trial balance. This step ensures that the ledger accounts are balanced, meaning the total debits equal the total credits. By doing this, we ensure the accuracy of our later financial statements. Second, adjust any entries that need correction, also known as making adjusting entries. These adjustments account for items like accrued expenses, depreciation, and other elements that may not have been recorded in the initial transactions. Next, prepare the adjusted trial balance. This step involves listing all account balances after the adjusting entries have been posted. The adjusted trial balance ensures that the ledger is still in balance after the adjustments. Now it's time to prepare the income statement. This statement summarizes revenues and expenses over a specific period, ultimately showing the company's net profit or loss. It helps stakeholders evaluate the company's financial performance. Following this, we prepare the statement of retained earnings. This document adjusts the company's retained earnings for items such as net income and dividends, showing how much profit was retained versus distributed to shareholders. Next comes the balance sheet. This statement presents the company's assets, liabilities, and shareholders' equity at a given point in time. It's a snapshot of what the company owns and owes, as well as investments made by shareholders. Then, prepare the statement of cash flows. This statement outlines the cash inflows and outflows from operating, investing, and financing activities, providing insights into the company's liquidity and financial flexibility. Lastly, review and evaluate the financial statements. Ensure they align with principles such as accuracy, consistency, and completeness. Analyze the results to understand financial position, performance, and cash movements. By following these steps, businesses can create accurate financial statements that provide valuable insights for decision-making and external reporting. Remember, regular updates and reviews are necessary to maintain the integrity of your financial data.